So let's have a look at Hershey from beginning. That's when it went to the market in 1984. So it's what, 30 years, right? 34 years. So if you bought share price when it went on the market, the share price was $2.58. And if you kept that share all the time and didn't sell, didn't bother about all these fluctuations, right now you would be getting dividends only $2.55. So imagine if your parents put kind of for you as reserve fund and put $1 million and bought Hershey, now you'll be getting $1 million nearly in dividends. And then the share price is what, 20 times higher, right? 20 times. So 20, no, it's actually not. 285 by 100, how much is that? Yeah, nearly 20, yeah, 20 times, 25 times, yeah. So 25 times higher. So imagine that $1 million would be now $25 million. Okay, 40 times, correct. Yes, 40 times. So yeah, so it would be $40 million here. And then remember that you would be getting dividends all the way up here. So I even didn't bother to calculate it. If you want, just calculate if you were buying these dividends and reinvesting them back to the same share, probably it would be much more than $40 million now, and kind of your income would be much, much, much higher. Okay. Now, if we look at this, this is right now a monthly chart. We can see on the monthly chart, it's still overbought. Okay, so it means that the share can go down more. Yeah, in one basket. Okay, and that's what happened during the last time. So that's where we were buying with our club. I told you a couple of years ago. After that, I think we bought it in this row, and it jumped on the proposal to buy Hershey. One of the biggest company came and said, okay, we want to buy it at $112. And that's where the share price jumped right here, and it stayed for quite a while here. Then owners, the company, they told, no, we're not going to buy it $112. We might sell it, but sell it only at, I think they put the price $130. So the share price jumped up, and then the deal fell off, and it went all the way to $96. I was expecting it will go lower, and I would buy more here, but unfortunately it didn't go down. So I didn't buy it again, and now it's dropping down. So I thought, okay, fine, that's the previous support. So, and then when I calculated express analysis, I thought it's going to be here at $96 level as well. So, but this, you see one fall, second fall, we can still see like still the room on indicators to fall. So it might easily go to $96 or maybe even lower to about $93. If it breaks through, it goes to 84. But fundamentally, I don't see any reason why it should go to 84, because here earnings were 20% lower than now. So I presume the lowest part has to be 20% higher. So 84 plus 20%, so $16 more. So it's what? 90 what, nearly $100. Okay, so that's what it is not right now. Okay, if we look at the smaller picture, that you can see the gap. So first candle stopped exactly at the previous support. So several times, probably even if we can extend it, it will be somewhere here. So 1, 2, 3, 4, 5 times. So when this candle went through, it stopped here on a day. Then it's dropped down to the next support. Okay, next level. And now it's broke and nearly went to the next level. Okay, now a couple of days, and last night it was dodgy. No, Mick, you don't need 10K now to use options. If you use interactive brokers, you can sell it straight away. At least a lot of people do that. Maybe this has changed something, but I don't think you have to have 10K on your account. If you use planner securities, definitely you will have to have not even 10K, you have to have 25K. It depends what kind of broker you use. But you can sell puts here. At least try. Okay, so we see this doji, so it might easy just return back here and touch it 96, $97. Okay, but don't you need 100 mean? What's that 100 mean? Didn't get Cham the question. Yeah, definitely you have to have 100 shares for option at least. So, oh yes, correct. That's now I got it, Nick, what you asking. Yes, if you sell one put, it's 100 shares, and 100 shares here, it would be what? $10,000. Correct. So I didn't get the question. I thought because in some brokers they have restrictions, and you have to have $25,000 before you sell any. Even if you sell puts only for a couple thousand shares. Now I got it. Okay, I got it. Yeah. Contract size, yes. Yeah, you see my account is much bigger, so I don't pay attention to this kind of stuff. So sorry, guys. I didn't think about that. All right. Uh, Now let's have a look at different strategies. By the way, if you buy it, for example, if you decide to buy, at what levels will you buy? At current level, you will be waiting lower. What do you think? You have some cash. Imagine that you have the money. Okay, the question is, are you going to put this at this level, or you're going to wait? So D95, 96. Buy some now, and if it goes low, buy more. Okay, Ali, perfect. Dory 95. Yeah, something like that. Definitely, definitely. Yeah, because you see here, it was quite a while for this level $104. It's tested. If the market now recovers back, so it might pull Hershey back as well. So uh, similar way as I was expecting here to drop more, it didn't drop, so I missed the opportunity to make like 15% profit on that specific share. So yeah, kind of sometimes it's good to be greedy, but sometimes we miss opportunities on this particular case. So Ali is correct. We might buy more now, and then if it drops more, buy more lower.